Hi, everyone. So today I'm with Dom, and we are going to be covering Visa for Q2 of 2026. Dom is going to go ahead and share his screen. Dom, whenever you're ready.
All right, let me know you can see it.
Yeah, perfect.
Awesome. All right, so let's just jump right into it. Quite a bit of information to go over really quick. So, article does state that Visa's revenue did climb 17% year over year in the fiscal second quarter, rising at a pace last seen in 2022, and as results came in ahead of what analysts had expected on Tuesday. And this article's from last week, so it's not too old. Just when it refers to Tuesday. Net revenue reached 11.2 billion for the quarter ended March 31st, 2026. The company said at $3.31. Adjusted earnings per share topped the $3.10 consensus analysts forecasted, so not too bad of a beat there.
Mhm.
GAAP net income was $6 billion, up 32% year over year. GAAP diluted earnings per share rose 36% to $3.14, while non-GAAP diluted earnings per share increased 20% to $3.31. They also mentioned payment volume grew 9% on a constant dollar basis, while cross-border volume excluding intra-Europe rose 11%. Total processed transactions reached 66.1 billion, up 9% from a year earlier. So good to see more revenue and sales from the previous years. They also mentioned data processing was up 18% and the largest revenue contributor at $5.5 billion. Service revenue came in at $5 billion for a 13% increase. International transaction revenue rose 10% to $3.6 billion. Other revenue climbed 41% to $1.3 billion. And then client incentives up 14%, total of $4.2 billion. Not too shabby, up pretty much in all those major metrics. Pretty good for them. And then there's a quote they mention consumer spending remained resilient, and our strategy and innovations fueled strong performance in consumer payments, commercial and money movement solutions, and value added services. This is from CEO Ryan McNary. Hopefully, I didn't butcher that name too badly. But basically, he just kind of sums up nicely that, even though, it was predicted that like maybe spending would be going down, come in the new year with tariffs and things like that and rising costs with inflation. Spending would slow, but obviously Visa's saying that spending's up, and they'll mention all their different segments and how they're actually beating all their revenue targets. So not too bad of them. One last thing I did want to mention is a buyback, stock buyback. So it mentions here that during the quarter, Visa repurchased about 25 million shares of Class A common stock at an average cost of $320.66 per share for a total of $7.9 billion. Combined with dividends, the company returned $9.2 billion to shareholders. The board also authorized 20 billion multi-year share repurchase program. Visa's held 14.2 billion in cash equivalents, and investment securities as of March 31st, 2026. So there you go. Beating it on the revenue targets, increases from year over year. Obviously, doing stock buyback
Yeah.
is a good sign. They have faith in their price, faith in their numbers. So I would say a very good quarter for them, and nothing to really complain about.
Yeah,
So
no,
we'll
it was
switch over
great.
to Matt and take a look at their current financial status.
All right, thanks, Dom. Great analysis.
Thank you.
All right, so we're going to first take a look. I'm going to go ahead and share my screen, and we're going to first have to take a look at Visa stock. So which is interesting is they've had actually quite a sell-off for the beginning of the year. And Dom, you could see everything for the Visa stock?
Yes.
Perfect. So it's 322 right now. Keep in mind, like Dom was saying before, Visa itself purchased its own shares back at 320.66. So still cheap relative to everything else. They've had a 52-week low of 293 and a 52-week high of 375. So they're certainly on the lower end. They're trading at a PE of 28, which I don't like to go by PE, but in this case, for a mature company, it's definitely on the cheaper side because it is Visa, so it always usually trades on a premium. And we're going to see this actually reflected in my DCF. My DCF is actually going to say it's undervalued by 9%, which is fantastic for Visa. I believe this is historical growth. When we check Wall Street forecast, Wall Street's going to be a little bit more, I would say, bearish, 9% overvalued. I don't necessarily agree, but granted, I think historical growth is more accurate. They are growing still at an incredibly fast rate, and they're having like a $20 billion overall repurchase program. So I think historical growth is more in line. Now, when we check Simply Wall Street's going to say that it's 21 billion in free cash flow. The next 3 years, it's going to be 29 billion. So really good on that front as well. It's obviously not going to be a strong, like a fast grower as other companies we've seen previously, but it's going to be what you would call a slow compounder or a mature company, which there's nothing wrong with it. It has a place in our portfolio, of course. The financial health of the company is going to be, I would say, pretty good. Of course, Visa is going to have debt on the balance sheet, just natural if they are in credit cards. So there's just going to be naturally debt, but just so everyone is aware. But everything else, I think, looks pretty good. So nothing to be concerned about. Pretty normal for their business. Now, the net income of the company also, again, reflects that it's been a slow compounding growth company. You have 14.9 billion in 2022. Now it's 22.2 billion. So again, slow compounding growth. Yeah, I mean, nothing wrong with that. Just, yeah, you're just getting slower growth. And last, we're going to check Tipranks. And Tipranks is going to be really good. Strong buy. 21 buys, 2 holds, 21% upside, a low of 315, an average of 391, and a high of 450. And it got revised because earnings came out, I think, a week ago or 8 days ago, something like that. I think 8 days ago. I think it was last week, early last week. So, but overall, I think it's good. And yeah, I would concur with this. I think it is a strong buy currently. Even at this price, I think it's decent. Dom, is there anything else you would like to add?
Uh, Nothing too much. I think you hit it pretty well.
Okay. All right, great. Thank you, everyone. And thank you, Dom.
Thank you.